heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up this hour, Apple sinks after warnings are there of weak demand for the new iPhone 16 Pro model.
Plus, the European Union's most influential tech enforcer resigns. Details about the surprise move out of Brussels.
And TikTok's courtroom battle with the US government begins. It's freedom of speech versus national security. What to expect this hour, but first, we check in on this market that is currently sinking. Perhaps no surprise, we had a 5-day run-up in the Nasdaq 100 last week. We added more than 5%. We saw, of course, a rebound in mega cap big tech. Today, money comes off the table. We eye what the Federal Reserve will be doing come Wednesday, and there's a key player that is under pressure, Ed.
Yeah, Apple is a big points drag to the downside. We're off session lows, but on track for our biggest drop intraday since August 5th. TF Securities International out with a research note, a survey of early pre-order data saying initial sales of iPhone 16 generation, the Pro, 37 million units. That would be a drop of 13% year on year for the first weekend of sales for the 15 generation. That's caused some panic in the market. There's several other analyst notes out today alongside TF International, citing concerns from China to the timing of Apple Intelligence release. One calmer voice is Bloomberg Intelligence's Anurag Rana, who joins us from Chicago now. And Anurag, you're basically saying we can't determine now that this is anemic demand. It could be oversupply of the available handset. What's your thesis?
So when you look at it, a few weeks ago, we heard that Apple was talking to its supplier to increase the shipments for this particular model by about 10%. So, frankly speaking, there is lots of puts and takes at this point. We think it's still too early to basically call this a dud. So we're going to wait for another 30 days, 35 days. Here's some official comments from Apple when they actually announce their earnings to really figure out what shipments could be for the next financial year.
Can you give us context as to how much you look at TF Securities? How much does this sort of pre-order data tend to fluctuate with reality?
It does fluctuate, and, where sometimes there are supply constraints, sometimes there is spikes in demands in the earlier side of it, which is why I'm saying if you look at it for a 12-month cycle, it could vary quite a bit. Seasonally, the December quarter is the big quarter for Apple, and this is where we could see some jump because of some improvement in China. On the other side, it could go the exact opposite way if China is weak or consumer spending is not very good. So there is so much dependent on the next 30 to 90 days more than just the first 3 days.
Anurag, away from the early pre-order data for iPhone, other analysts talk about China in the context of domestic competition. Now that you've seen what Huawei has to offer, how do you model that domestic competition in China?
So I would say that if you look at it, there was a big spike in demand because of Huawei releasing its 5G phone. Now, there has been many years since they didn't do that. And then because of that, there was you could say, a pull forward in demand for them of the normal refresh cycle for that particular brand. For Apple, Apple has to fight quite a bit now to gain market share again in China. And I think if there are going to be any discounts from Apple anywhere in the world, we think it's going to be in China at this point. Now, the new phone that came out from Huawei, the $2,800 one, I don't think that does that damage to Apple's iPhone sales because it's two different categories, frankly.
We're seeing weakness in suppliers to Apple as well, Anurag, at the moment. What's the next data point? What's the next read we should focus on?
I think when the company announces their results and then you will get some official comments as to how those pre-orders are, I think that's far more important at this time. The second thing we want to see is when are the AI features coming out and what kind of buzz is around it, because I think that can change consumer sentiment very quickly if there are cooler things that people can play with the phone, and that can help drive some of the sales as well.
Anurag, so pleased to get, as Ed put it, your calm voice on today's show, Bloomberg Intelligence, Anurag Rana. Meanwhile, let's just pivot to the EU, because the top tech legislation enforcer, Thierry Breton, has resigned. In a letter posted on X, Breton outlined the surprise move, saying France was asked to provide a different nominee for the European Commission, writing, quote, "In light of these latest developments, further testimony to questionable governance, I have to conclude I can no longer exercise my duties in the college." For more, Bloomberg's John Picelli joins us now from Brussels. Breton really had a key hand here in shaping the EU's response to what seemed to be growing power of US tech. He was the enforcer of the Digital Services Act. Why is he out?
Well, seems to be mostly because he and von der Leyen didn't get along well together. I mean, if you read the letter, he clearly said that von der Leyen, President of the European Commission, demanded that or requested that France propose a different candidate due to personal reasons that Breton himself was not familiar with. So he has always been a bit of a heavy hitter, a bit of a maverick within the Commission. He certainly loved the limelight, and that probably rubbed some people the wrong way. At the end of the day, you, of course, mentioned the fact that Thierry Breton spearheaded some of the EU's most important rule books when it comes to tech and digital regulation, but those things are done. Those laws exist. The bureaucrats enforcing them are in place. So even if Breton is not there, in a way, his spirit, his ghost will keep living. So that's not necessarily a big worry for the Commission.
Will his ghost live on in Stéphane Séjourné, who Macron has already tapped?
Well, we don't know yet, because it depends on what kind of portfolio Séjourné will get. And that's not clear. It's going to be, for sure, meatier than what Breton would have gotten. That was essentially the offer on the table, right? Macron was told, for personal reasons, I don't like Breton, according to what Breton says. Therefore, you get a meatier portfolio if you propose another name. And Stéphane Séjourné threads in, and let's see what portfolio he gets. It's supposed to be a big one, so we'll see. But it might be not to do with digital issues.
There are some issues for von der Leyen in a new term, right? 450 million people almost in the EU. A lot of them watch this programme, Jan. What's kind of on her agenda in forming a new commission and the team that she wants to assemble?
Well, in the agenda and the teams she wants to assemble are two different matters. We know that she's not very pleased with the fact that most member states put forward male candidates as opposed to two candidates of both male and female. She wanted to guarantee a gender balance within the collège, the way they call it. But so far, actually, the count is skewed in favor of men. When it comes to the actual agenda, we kind of got a glimpse of what it might contain last week when the landmark Draghi report was unveiled by Mario Draghi, former Prime Minister of Italy and President of the European Central Bank. Okay. Ursula von der Leyen has made very clear that she will use that pro-competitiveness agenda to forge her next mandate.
Regulation of technology has been a top priority for this term. How big a priority will it be for the next 5-year term?
It depends on how much von der Leyen decides to actually cleave to the letter of Draghi's report, because if you go by that document, the time for regulation is kind of the time of regulation was the past, where the future has to be all about encouraging innovation, competitiveness, big mergers of national champions and telecom and defense contractors. So it should be less about regulation and much more about building technology, or at least encouraging European technology companies to emerge. So if that's what happens, regulation will be kind of the backbone, the bedrock on which a new kind of agenda will be built, which will be much more about innovating than regulating.
Okay. Bloomberg's Jan Picelli, great to have you on the show from Brussels. Thank you very much. Let's get to another top story. Shares of Trump media are down in today's trading following another shocking development in the US presidential campaign yesterday, when members of the Secret Service engaged what law enforcement described as a rifle-wielding potential assassin near former President Trump. Gunfire erupted at his Palm Beach course while he was playing golf. In the immediate aftermath, Trump emailed supporters to declare he was, quote, safe and well. And on DJT Carry, I think it's worth pointing out real quick that on Friday he had said he wouldn't sell out of his shares, and that's been a factor in that name as well. What we got coming up?
Coming up, a U.S. appeals court, Ed, is hearing challenges to the TikTok ban law. We're going to be joined by Doug Calidas, fellow at the Harvard Belfer Center, on what to expect. Meanwhile, just checking on some shares for a moment, because Boeing is moving. We understand, of course, that they are looking at a hiring freeze. They're instituting that and considering temporary furloughs after some employees went on strike Friday. This is according to a memo to employees from the CFO, Brian West. This is Bloomberg Technology.
Alibaba and smaller rival JD.com both under pressure as investors are weighing the potential fallout from US plans to begin taxing packages worth less than $800. Washington's latest move to clamp down on tax-free imports of Chinese goods is closing a loophole that Temu and Shein have employed for years to ship hundreds of millions of packages into the US annually, helping them carve out a market at the expense of Amazon. We'll keep tracking that. Today, TikTok is taking its fight against a US ban to the next level in the American court system. The US Court of Appeals for the D.C. Circuit will hear arguments against a new law signed by President Joe Biden banning TikTok in the US if its China-based parent company ByteDance does not divest ownership by January 19th. Doug Calidas is a Harvard Belfer Center fellow and former chief of staff to Senator Amy Klobuchar and joins us now. And at the heart of the argument from TikTok is the First Amendment, that the law impinges upon the freedom of speech of TikTok's 170 million or so users in the United States. How successful is that argument going to be?
We'll find out, Ed. This is a tough case. On the one side, you have First Amendment right of free expression, which the courts are likely, they don't like to circumscribe that narrowly. They're going to give that a broad read. At the same time, you have what the U.S. government is saying is a unique security threat that has unprecedented reach and depth. So you have strong arguments on both sides, and everyone's watching to see which way it'll come out.
Doug, we, the three of us, have discussed this before, and we will discuss it again. Why does the political engine not take into account more the wishes of the user base, the 170 million Americans who like using TikTok?
It's very difficult for lawmakers to go against the will of the voters, but it happens when there's a serious enough threat that they're willing to reach across the aisle, hold hands, and do something difficult together. When this law was passed, you saw Democrats and Republicans in both chambers vote for it in overwhelming numbers, which gives everyone cover. It's very difficult to criticize one party when the other party is doing it just as much.
Do you think it will be justified in banning?
I don't know. I think this is a very difficult case to predict. It's, people have said we're in uncharted territory here. It seems like the First Amendment questions are very profound. At the same time, the Justice Department has laid out what many believe are very compelling reasons that TikTok is a threat to national security. Of course, a lot of this justification is done in classified filings that we as the public do not have access to. TikTok's own lawyers don't even have access to this. So much of this will be decided behind closed doors by the judges and the U.S. government. And we'll find out what happens shortly after the election if they adhere to the timeline.
Talking of timeline, it feels like things have changed quite a lot since last we spoke. The furor around it has died down. And I'm wondering more broadly whether you think the focus from lawmakers is as ardent, whether their data will be as proven out from a security threat perspective, and whether a ban would fix that.
So prior to passing the law, the executive branch and Congress gathered a great deal of information, and the filings lay this out. There's testimony from a lot of national security officials, a lot of public reporting about some of the links between TikTok and the Chinese Communist Party. And they've made the case. The question is whether the First Amendment permits this type of really draconian restrictions. This is an unprecedented action by the U.S. government against a media outlet. But they're saying that the facts of this case are unique. I think we know enough about the facts, notwithstanding the classified filings, to have a sense of really what the stakes are here. But no matter which way the case comes out, people are going to be unhappy. I think even if the government proves its case and they find that national security reasons are strong enough to justify the action, there's a precedent that's going to be set for what the federal government can do with regard to technology and platforms that a lot of people can be worried about and could possibly be abused by the government in the future. It's often said that tough cases make bad law, and that may be what happens here.
Doug, as a student of the law, I love this bit, but the courts will balance the freedom of speech argument against the national security interest argument. This is what the DOJ says. Given TikTok's broad reach within the United States, the capacity for China to use TikTok's features to achieve its overarching objective to undermine American interests creates a national security threat of immense depth and scale. How difficult or not will it be for the US to prove that national security threat?
So it depends on what legal standard the court employs. There's different levels of scrutiny, how closely they look at the government's motivations and justifications. If they apply what's called strict scrutiny, the bar is quite high, and the government has to show that there's a really compelling government interest and that the law is narrowly tailored to meet that aim. They go to great lengths in their briefing to try to lay out the case, but it is a high bar. And again, this is a case that is so unique that the precedents that are on point don't seem quite right. We know that the government can prevent foreign ownership of radio and television companies, but they do that under the license authority. They have much more restricted powers when it comes to print sources. So is TikTok more like a print source, or is it more like a radio or television station? It's something different, and that's what the court is going to have to contend with. Just briefly,
we've heard, of course, from TikTok, the argument remains the same. This ban would devastate 7 million businesses. They also talk of the 170 million Americans that Ed already referenced. You understand the world of lobbying, having worked in that world previously. What will it be like behind the scenes?
So what's interesting about the lobbying effort before the bill was passed was that TikTok put a lot of money and resources and effort into trying to prevent the law from passing, and it was entirely ineffective. Now, we can talk about tactics, and they took some steps that people believe backfired, but it seems more important the fact that it is a foreign company, and fundamentally, foreign-owned entities have different rights under the U.S. Constitution. They are restricted in some methods they can use to lobby, and there's a lot of U.S. tech companies that don't love TikTok and would be quite happy to see it go away. And they also have their own lobbyists. So it goes both ways.
Ones who don't love them, perhaps competitors. Harvard Belfer Center fellow Doug Calidas, thanks for joining us. Now let's talk about China a little more. It's claimed a breakthrough in the development of homegrown chip-making equipment, an important step in the overcoming US sanctions. Now, the Ministry of Industry and IT advised state-linked organizations to use a new laser-based immersion lithography machine with a resolution of 65 nanometers or better. Basically, it's a significant step up from the previous most advanced indigenous equipment, which did around 90 nanometers. Ed.
OK, coming up on the programme, a look at Masimo's new partnership with Google, with Joe Kiani, CEO of Masimo, an interesting conversation with a lot going on in the background. That's next. This is Bloomberg Technology. Apple shares are under pressure. We're off session lows, but down almost 3%. A TF Securities survey showing that pre-order sales for the iPhone 16 generation down about 13% year on year from the 15. Demand not what we thought it would be. Continue to track it because supply is under pressure as well, Cara.
Yeah, Mark Gurman writing over the weekend that really it was the health side of the equation that stole the show. But as Apple, of course, sinks this morning following last week's product launch event, the company still hasn't resolved their legal fight with Masimo Court. There's a blood oxygen detection, of course, that company offers, which prompted a US ban on Apple Watches featuring the technology. Now, Masimo has partnered with Google and Qualcomm to develop a reference platform to help bring more smartwatches to market with their biosensing capabilities. Joining us now, Joe Kiani, the CEO of the company. And what is this about? You have impressive health features, but Apple Watch, we just heard the new unveiling, they're getting sleep apnea and the like. How do you compete there, Joe?
Well, we compete based on good science. We have continuous, accurate SpO2, pulse rate. We can even measure hydration. pulse rate variability. Nobody else has that. In fact, I don't understand how you can do sleep apnea without SpO2. I know clinically it's not done. So it'll be interesting to see if Apple's promising things they can't deliver again, like they did with their SpO2, or they really have figured out how to do it without SpO2. Time will tell.
So you're offering this platform with Qualcomm. You're helping Google offer more smartwatches, more health features. It feels as though that, Joe. Look, if you don't think that Apple can deliver what it promises, does that mean more court action? Where does your fight currently stand with Apple and its smartwatch?
Well, we, as you know, enjoined Apple from selling SpO2 in the US. There's a trade secret case that's going to be reheard. And if we win that, then we'll have a broad injunction against them on photoplethysmography. So they can't even do pulse rate and arrhythmia detection. And then if we win our patent case, which is about how do you do photoplethysmography with very low battery consumption, then that'll be even a wider injunction. So potentially our injunction could go worldwide and much broader. However, what's really cool is this partnership with Google, which I'd love to tell you more about. We're excited about it. Every Android user now can have a real scientifically based, continuous, accurate wearable with this reference design we're creating with them. And I think in the next couple of years, you're going to see a slew of products, from luxury products to smartwatches, from the typical Android world, that will be an incredible offering for our mutual customers.
I hate to say it, Joe, because we've only got a minute, so I ask for it to be brief, but you've got some fascinating things happening. You've got a proxy battle going on at the moment. They want to see more governance, want to have more board oversight. How do you fight Politan?
Well, you saw that Politan was found to have lied to our shareholders. The court, a federal judge, found multiple lies, held him in contempt. So you got someone who has no integrity that talks about governance. Yet you have us who've done everything right, morally right, not just even legally. And we've made all this progress from bringing the business through COVID and now this incredible Google partnership. I think this should be 91% to 9%. Only person voting for him should be him.
Joe, we wish we could have more information from you. Maybe we'll get you back after the vote comes September the 19th. We thank you, Joe Kiani, CEO, Masimo. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And Ed Ludlow here in San Francisco.
Let's get a quick check on these markets. Under pressure after, though, a very strong previous week where the Nasdaq 100 rose 5 straight trading days. We pull down. We have anticipation for what the Fed does later in the week. Maybe a little bit of risk coming off the table, particularly when you have some key stocks under pressure. I'll get to them in a minute. We're looking at the bond market, pretty much down 3 basis points. We ignore the percentage point there. We're looking at Bitcoin at 57,000. We've seen that under pressure ahead of the Federal Reserve potentially cutting. Will it be 50 basis points? We see we're off by 3% when it comes to crypto. Move on. Have a look at the individual movers. Because, look, I talk about what's dragging the benchmark slower, and it is Apple, for one. We're off of our lows, but still sinking. Worrying signs. TF International Securities, an analyst there, saying maybe the iPhone 16 Pro side of the equation, demand not as strong as it was previously. Bloomberg Anurag of Bloomberg Intelligence saying, well, Anurag Rana says maybe it's just more a sign of supply side. I'm looking at what's happening with ARM, having been really ramping higher over the previous week, maybe pulls back as benchmark says, look, this isn't quite a buy at the moment on the AI prowess. And I'm looking at Intel, up by 3.5%, Ed. We covered it a lot last week. Intel actually getting that $3.5 billion to make Pentagon chips, but it's still down 61% on the year. What have you got?
Another mega cap name, Microsoft, just announced that Vodafone signed a large deal to use AI assistants for Office and unveiled a range of new AI tools designed to help workers create Excel charts, prioritize emails, and collaborate with one another. Listen to this.
You can think of Copilot as the UI for AI. It helps you break down these silos between your work artifacts, your communications, and your business processes. And we're just getting started.
Bloomberg's Dina Bass is here with the details. And Dina, I point out that when Microsoft started its presentation at about 11 New York time, stock was modestly lower. It's now modestly higher. But in Vodafone's case, it's kind of evidence, finally, of how workers might use AI in the workplace for actual stuff. Give us the details.
Sure, Ed. Yeah, and this is a pricey offering. Microsoft, if you do this, they're asking you to pay $30 a month per user in addition to what you already pay for Office licenses. So part of what they're trying to do today is twofold. They want to demonstrate new features, and there's some discussion of that, but they also want to demonstrate new customers, that people are actually using this and that it's helping them do things, that it's saving them time. And so, one of the things they mentioned around Vodafone, which has been trying it out with a smaller group of people, is that those early trials found that workers saved about 3 hours a week per person, which may sound modest, but it's a start. I think that's one of the things they really have to demonstrate, is that these are useful tools and not just like a fun thing or something that companies are going to spend money on and not really know how to use effectively.
Call them co-pilots, call them agents. Everyone's discussing it. You've got Salesforce, now Microsoft. And ultimately, Microsoft's competing against its own technology provider here, OpenAI. How does it distinguish itself?
Sure. That's a lot of what we're hearing today. The event today is focused not on consumers, but on corporate customers, and it heavily leverages Microsoft's, long-standing stronghold in the corporate computing space, which is Office, of course. So the co-pilots that are being discussed today are for things like Excel, Teams, Word, Outlook, email. And the idea is that, whether it's competing with OpenAI or Salesforce or other business software companies, the real kind of stronghold beachhead that Microsoft has with corporate customers is Office. So to the extent that they can create useful artificial intelligence features that work with Office, that's something that no one else can offer. And one of the biggest strongholds that really people have not been able to replace Microsoft in is Excel spreadsheets. Financial analysts, people who really live in Excel, say, for the most part, can't really use anything else. And Microsoft's been trying to figure out how to get the AI co-pilot working well and in a useful fashion, and what they hope will be a critical fashion in Excel. And they announced, some new features around that today, and in particular that they're going to integrate the Python programming language, which is really popular for data work, into the Excel AI Copilot in a way that lets people use it without having to actually know programming code. You could just make a regular, English language or plain speech queries.
You've covered this company for a long time, and I always reflect in Microsoft's history that they're really good at selling stuff, software, that you could probably get otherwise for free somewhere else. The co-pilot's $30 per month per user. So if you have a company with thousands of employees, you'd think they'd start having immense revenue growth. When does the street think they will?
Everyone's trying to figure that out, and it's going to be even harder, because let's be clear that when Microsoft reports earnings, it's not as if they're breaking it out in such a way where you could say, oh, this increase in Office is due to Copilot. Again, they gave some numbers today, but they don't, they're positive for Microsoft, but not terribly specific. And so they said, for example, that Copilot customers increased by more than 60% quarter on quarter, and that the number of clients with more than 10,000 users doubled. But we don't know what that translates into raw numbers. We don't know what that translates into revenue. And also, I began by saying $30 per user per month. That's the list price. Most corporate customers that use Office do that through a multi-year enterprise agreement. And there is, the way agreements work in this industry, there's discounting. So we don't really know if they're, particularly for these early customers, are they giving them any sort of promotional pricing?
Dina Bass, thank you very much indeed. Let's keep the discussion going across Microsoft and more broadly. Adam Benjamin, Portfolio Manager for Fidelity's Select Semiconductors portfolio, and plenty of others as well. Adam, it's great to have you, because some of the funds that you help manage have a sizable exposure to Microsoft. Are they owning their moat at the moment?
Thanks for having me. Look, as you talked about in the segment before, we're pretty early in AI. $30 per user per month is a lot to ask, and even if it's being discounted, we're talking about something that's going to take a while to play out, and having these tools be used and people figure out how to use them will take a while, but the use cases are rolling out, and we're going to see this over the next several years for sure.
The question is, what's priced in? And I was discussing ARM earlier, which has had a massive rally last week, and the chip designer, a new call on the street saying that the price is already reflecting a lot of the upside here. Is that the case for the Mag 7, for technology more broadly, as we start to see rates getting cut?
Yeah, sure. I mean, to talk about the Mag 7 in one case is hard, right? There's 7 different companies. They all have different businesses. 3 of them have cloud businesses, of course, so they overlap. But outside of that, they're very different businesses. And I think, just centering in on AI in general, I think there is a lot of consternation in the market. Clearly, you're talking about the Fed and interest rates and the macro environment, which is one whole piece of what's going on and something I need to pay attention to as a portfolio manager. But from a technology perspective, and just generative AI is evolving, and we're still really early days in this. I know the market has this desire to sort of have instant gratification, that we're just going to see it all of a sudden. This is a super complex problem. We need to roll out all this infrastructure, get the compute in place, train these models, retrain the models, and then roll them out over time. This is going to take some time. So, in terms of what's priced in, it's really hard to talk about it, broadly speaking. Clearly, there's some stocks that have been overpriced, that have priced in a lot of their upside. If you look back in 23, just as an example, there was this dynamic where everyone was an AI winner. Well, look at, fast forward to 24, you've seen some separation. You mentioned Intel as an early example. That stock was up 95% in 2023. That stock is down 60% this year. So we're starting to see a separation of not everyone's going to win, and there are going to be winners, there's going to be losers, and yeah, certainly there's certainly stocks that have priced in a lot of this goodness, and then there's some that haven't.
So, Adam, you've called it early innings, and you've talked about not maybe seeing something immediately to the satisfaction of the market. But now that earnings season's out the way, we've discussed what kind of jacket Jensen was wearing and how bullish a signal that was. Is the story intact for you, the big picture AI investment cycle story?
I mean, once again, it's hard to say, broadly speaking, to capture every company. But I think in terms of AI, I still think we're very early in this cycle, and there's some companies that I think are going to massively benefit here, and we're going to continue to see this out. And I think when I look back, June period, it felt like kind of everyone was in the boat, and now there's a lot of skepticism, there's a lot of concern, and that's really healthy for the market. But I think this is going to be a journey. There's going to be bumps along the way, and the stocks also disconnect with the fundamentals at different times. Stocks sometimes price in too much, sometimes they get too negative. And so, you got to think about it from that perspective as you manage money in my job for my investors.
Adam, every day I think not just about the GPU, but high bandwidth memory, Ethernet as well, areas of the market that perhaps are underappreciated. In that supply chain, what are areas that you feel right now are underappreciated or misunderstood?
Sure. I mean, there's a long answer to that, but I think overall there's been this emphasis on chips, and I think where people are getting it wrong a little bit is these are really data centers, right? These are supercomputers. NVIDIA doesn't sell a chip. If you look at Blackwell, they have 7 different chips that they design. It's a full system. And it's a full stack solution with software, the algorithms and the libraries that are really important to make all this work. So, but within that, as you mentioned, high bandwidth memory. Without high bandwidth memory, that's crucial to making this, evolution of AI happen. There's a lot of interconnects that are super important in terms of networking. You mentioned Ethernet, that's important. So is InfiniBand. There's other interconnects like Astera Labs makes that went public back in March. That is super important, and optical interconnects as well. So there's a ton of things that make this happen, but people need to be thinking about it not on a chip-by-chip basis, but more on a systems level.
Fidelity Portfolio Manager Edmund Benjamin, great to have you here on Bloomberg Technology. Really appreciate it. Now, coming up, we're going to be joined by LTK President Amber Venz to talk about the state of the creator economy, even as TikTok's future in the United States is up in the air. This is Bloomberg Technology. Okay, time for Talking Tech. And first up, SpaceX's Polaris Dawn crew splashed down off the coast of the Dry Tortugas, Florida yesterday. This after their historic first commercial spacewalk on Thursday. The SpaceX capsule hurtled through the atmosphere before gliding into the ocean for landing. Plus, AI startup Grok has partnered with oil producer Aramco to build out data centers in Saudi Arabia with the hopes of becoming a hub for companies across the Middle East, Africa and India. Aramco will fund the development that is expected to cost, quote, in the order of 9 figures. And a Jeff Bezos-backed group says it's setting up a program to attract investment into South African power grids. The Global Energy Alliance for People and Planet says it will work with partners for investments to repair and upgrade the grids, needing nearly $18 billion for the introduction of renewable energy. Caro.
Now let's talk about the creator economy, Ed, as today is LTK's 12th annual conference, bringing together nearly 400 top global creators to discuss the state and the future of the industry. LTK co-founder and president Amber Venz joins us now. And Amber, congrats. A lot of years under the belt of this event. What are the concerns? What are they worried about?
Few things top of mind for our creators this year. And last month, we just hit $3 billion invested in LTK creators on the LTK platform. We're continuing to see dollars rotate in. As our creators think about preparing for the future of their business, the two things that are top of mind are community. Where are they going to retain, nurture, and grow that community? We know that for a creator, the plot is that they have to have a community that they can access and that has high trust within, that they're engaging with constantly. So first of all, on the community side, where is that community being built and how are they going to continue to engage them? On the other side, we released a massive suite of AI tools for both our creators and our brands today. These are the type of tools that's not AI for tech's sake. These are the things that are moving their business forward. So this is driving efficiencies. It's doing work for them. It's taking subjectivity out of the decision making. And we expect it to drive big outcomes for both brands and creators. We now see that the vast majority of every single demographic in the United States says that they are shopping from creators. Creator-guided shopping has arrived, and LTK is the platform that powers creator commerce.
If they're not building community in the way that they were on the normal platforms, what is happening, Amber? How are they driving dollars?
Well, it's a great question and connected to a lot of the conversations today. Over the last decade, they've spent their time really investing in social media platforms because those platforms actually used to be the place where they could collect, nurture, and grow that community and meet them every day. And what we've seen is that over the last several years, especially acutely over the last year, these platforms have moved from being people-based to interest-based. We see that people are spending more time on these platforms, but they are reporting much less of a productive experience there. They really are missing out on the human connection. So LTK has been investing in a place for creators to actually keep their audiences, grow them, reach them on a daily basis, because the job that social media platforms have, they've really abandoned as they've, of course, leaned into, as they would, their revenue model, which they're not created to help a creator reach their community. They're created to be an advertising, product. And so we filled that void for these creators. And so they're doing it on their LTK. LTK is now shifted to become a video-first platform that's driving major outcomes for these creators. In the last month, we've made some shifts that have resulted in people watching over 5 minutes at a time on a creator's channel through video. We know that connection with their audience is really important. High trust is why this industry exists and why it works.
Amber, exactly a week ago, I was in the Steve Jobs Theatre at Apple Park for the new iPhone event. And there, let's say hundreds, thousands, hundreds of creators there. They all use different technology to make their content, and they all publish it in different paces. But I just found myself thinking, what a crowded field. Do you get that sense that there are now just so many creators that the value is a bit of a question?
There are actually millions of creators with over 1 million followers. So as you think about those of consequence today, LTK works with 300,000 creators, and that's globally. About half of them are here in the US. We're working with professional creators. And really for a brand today, they don't have to depend on looking at follower counts or views to understand the influence of a creator. They can come to LTK and see what their community is actually doing, not just from top of funnel, but all the way through to actually purchase behavior, which is becoming increasingly important for these brands, especially in this economy. They're looking for ROI, and those are the types of metrics that they need. What I love in what you're mentioning is actually the suite of tools that's required for a creator to do their work does depend on the likes of Apple. And so that's been fuel to this, whole industry. The fact that I have every tool that I need in my pocket right now for free is incredible. And so we're really excited about the innovation that we're seeing from even the hardware in the industry.
LTK President Amber Venz. Great to have you back here on Bloomberg Technology. Thank you. Another story that we're watching out of China. Tencent's Pony Ma is China's richest person again. The Tencent co-founder taking the title from the likes of bottled water mogul Zhong Shanshan and ByteDance founder Zhang Yiming. Ma's wealth swelled lately as Tencent gains surpassed its rivals, driven by its gaming gains, with titles like Black Myth, Wukong. Caro.
Coming up, we'll recap the Emmys and how Shogun became the first non-English language series to win for Best Drama. Meanwhile, we've got to get back to Apple shares and how they're trading today. They are off by more than 3%. When you're a $3 trillion company, that means $100 billion, folks, in one trading day alone thus far. This is Bloomberg Technology.
Now for a look at last night's primetime Emmys. TV drama Shogun gave Disney the top Emmy for the first time in 19 years. The show, filmed primarily in Japanese, set a record for the most wins by a single show in 1 year, with 18 across the primetime Emmys and last week's Creative Arts Awards. While HBO claimed top comedy with Hacks, beating out Hulu's The Bear, Disney earned the most awards of any entertainment company. Let's get more and bring in Bloomberg's Lucas Shaw, who leads our screen time coverage. And late Sunday night for you, Shogun, for me, it's been one of the top of the year. But there's a success story for Disney in there as well.
Yeah, I mean, to put it in perspective, Bob Iger was both at the Emmys and then also at the Disney after party. That is not something that he usually attends. I think he was there because he knew this was a big night for the company. The winning top awards at the Oscars and Emmys hasn't historically been sort of a core part of the Disney strategy. They're making these big popcorn pictures, big commercial television shows based on things like Marvel and Star Wars. But FX in particular just had a huge night. Even though The Bear didn't win Best Comedy, Shogun and The Bear combined, I think, won 29 awards. It was enough to make FX the top network on television.
Top network. You've been speaking with top leadership there as well at the moment. We've been Dana Waldron. She was at your event last year as well, Screen Time. And I'm just really interested in, you've got this event coming up, of course, in LA, October 9th and 10th. We're all going to be there. We're going to be broadcasting live. Can you just quickly tell us what we're going to expect? Is there more about Disney's prowess?
Sadly, no Disney this year because they have an executive leadership retreat in Florida the same week as Screen Time. But we'll have people from just about every other company, top leaders from Netflix and Amazon. We'll have the CEO of Comcast. We'll have the CEO of Live Nation. Some fun celebrities as well. Snoop Dogg, Kerry Washington, and the creator of South Park among them. We're going to be talking about just the crazy time this is in the business of media and entertainment, with companies merging, fighting, and really unsure about the future of the key of their business. You guys were talking about Apple. Apple at least knows what its business is, makes a lot of money that way. A lot of these TV and movie companies are still trying to figure out this streaming thing.
Still.
One such drama is Disney and DirecTV, right, Caro? Just 15 seconds, Lucas. More drama to come?
Definitely more carriage fights to come, but not for Disney in the near future.
That was quick. Lucas Shaw, so on it. We thank you. Up late, on early for us, and Bloomberg Screen Time is happening October 9th and 10th. You do not want to miss it. Live with Lucas Shaw and a few helpful others. That does it for this edition of Bloomberg Technology, though, Ed.
Yeah, what a frantic start to the week. Recap on the podcast, you know where to find it. Terminal on Apple, Spotify, and iHeart online. The team out in New York City. Good morning from the team out here in San Francisco. This is Bloomberg Technology.